It's the Market Sniper. Yep, it's been ages since we've done something on Forex, specifically. Very strong Forex angle in here. Yeah. Forex, indeed, foreign exchange. We're going to be talking about that. And there's an indice in this. And there is a macroeconomic event call that is coming with all of this. This is the beginning of the hellfire that is your beautiful reset. That will be your on-ramp to central banking digital currencies, biometric IDs, passports, and all these delicious things, as well as social scoring. That's right. Have you been a good boy? Are you buying the right things? That's right. Beautiful. It is. It is coming. The great on-ramp into your Bolshevik communism. But before it happens, lots of things have to be broken. And in some ways, the financial system to really break will break on dollar strength. So what are you going to get from me today? 6. How many fingers is that? It's 6 FX trades plus an index trade. That's an extra one. A lucky number 7. You're going to get an indices trade as well out of this. And I want to highlight a couple of things before people go, oh, you got it wrong. You get this. These are macro time frame. My community and I will be watching them, and we'll be delving down and getting all frenetic like little beavers building the damn wall, awaiting the great Noah-esque flood come the key moments. And it's not my intention to be able to give that all to you free. You're getting the ideas, create your watch list and manage that, or be part of our community where we have all eyes on the front, sentries posted at every corner, waiting in fast cars with sniper rifles to defend and ensure that we maximize this opportunity. And for that, there is a link below. Click it and book a call if you want to build wealth during the Great Reset, probably the beginning of the end of times in terms of your freedom in the economic financial system. Before that lovely on-ramp of all those juicy things that we've been predicting, and others, many others as well, that have been an accelerant since events of March 2019. Oh, so one of the biggest ones, so the reason I'm telling you this is macro, is if tomorrow some of the things we're telling you may well go up, end up down tomorrow, and down even quite hard tomorrow, it doesn't mean the macro idea is wrong. It also doesn't mean if it's not up that it's also a fail. This is monthly time frame chart stuff. That means the long-term move. The long-term move is that way, and also, in all those cases, we expect it to get disorderly at some point. That doesn't mean that happens now. These calls are going to be valid, not just for 2021. They will be valid through into 2022 and could even possibly have some elements that are playing out in 2023 and beyond. So you want to position for the big win that comes. In trading, when you're trading with a big macro trend, you want to position before, in advance. You're at least one major time frame ahead. Now is not the time for thinking about bearishness, for example, on the dollar. After the events of March 2020, you should have thought about it with all that printing, and you should have been one step ahead to the short side, for example, on the dollar index. So let's get straight to it. But just 1 second before we do that, hit us a like, hit us a share. That's the only currency we ask for. No adverts on this channel. Hit us a like if you enjoy not having adverts on this channel. Hit us a like if you're glad that we have an Odyssey channel where we tell you about more of the detail of these things and use some of the danger words. And you can go and watch content there. Plus, get all of this backed up over there on Odyssey. Make sure you know it. Hit us a like if you like the fact that we prepared a mini series for you. Even if you have no money at all, you can go and get some basic principles and a lot for free, including this watch list that you should have on your TradingView charts for big macro moves. Positioning net long in the direction of the flow, or net short, because there's going to be a short in there as well, could see you make wife-changing money. That's right. And in any one of these trades could in fact be career-making trades from the people that gave you the Euro Swiss franc short in 2009 that preceded the Euro crisis, before anyone was talking about the banking crisis, that reasserted it in 2015. From the people that gave you the spill on the oil in 2014 and the follow-up spill of 2019 beginning 20 as well. Major single trade event moves that you could have taken a number of equities on as well and built an entire trade year. I'm talking about single big events that are determining the entire year, of which 2020 March had one of them, and those oil short calls were the maximum. So this will be associated with macro news, macro sphere. There's going to be a lot of things that are going to come out of this. Inflation is going to move a little bit out of America because we'll be calling a number of trades very long with the dollar being the strength, and onto Europe and certain Asian nations, and definitely onto the FX emerging nations as well. So that is going to be a passing of the ugly stick for inflation to the other part of the world. And actually, as someone who always, by default rule, calls opposite to the Fed, when they say, oh, we're going to do this, we do that, I say they're going to do a U-turn. The next thing they'll be doing is this and that. Actually, we're seeing dollar strength. Now, how much of the taper they maintain in getting that, how much of that is down to it, I don't know. But this time, I feel they're getting a different outcome and the dollar will, in fact, appreciate. They need it because the inflation narrative is all over on the Americans at the moment, and they're going to pass that to Europe and the East. So let's get on with it. Let's get straight to the charts. Here we go. I'm going to show you the dollar index right up above. By the way, dollar index, calling it long. I think Brent Johnson will have his day. You may remember him of the milkshake theory, the dollar milkshake theory. He is probably going to be accurate in the end. Remember, beware guys that think about the minutiae of the detail, but just might have timing wrong. They often come home when the events are lined up. He's not a macro technician like us, and I think this event is setting up. So let's have a look at this chart. Yep, here it is. So when I was in another part of the world, I drew that green line as to what I expected to have happen on the dollar index. It was roundabout the events of March 2020 over here as we started to get shooting stars. I hadn't come back to this template called Bitcoin only, which of course now I've got currencies on, as you do, change your categories. I hadn't come back to that one in a long, long time. And I was looking at the big time frames. You do your best work as a technician on monthly charts, big time frame charts, especially if you have a real method like HVF method that focuses you not on moving averages, not on RSI values, not on stochastics, not on MACDs, but on real price pattern based behavior, volume by price, and other key non-dogma orientated elements for which we focus upon. So that turn we expected. Okay, look, shooting star, very skittish. That's called a rickshaw boy, that very long one that you see from the top. You kind of see the man on his bicycle type story. And that highlighted indecision. Then you got a follow-up shooting star over there. And then you got a rejection and you started to trade through tactical lows. Tactical candlestick charting, you would have traded the short from the low of that shooting star, and you would have captured a very severe fall off in the dollar. In fact, compared to my expectation, it came down harder. But we did say this was the put up or shut up moment, and it balked at running that. It balked at running that. It didn't want to go any further. Remember, what are we measuring here? The dollar against the euro, largely, but also the pound, the yen, the Swiss franc, and a handful of others. So in a portfolio, you can go go it, and you can see the constituents of that index. It doesn't include on any meaningful level, for example, the Chinese yuan and other currencies. So it's very much America versus Europe in a strong context. The pound is in there as well. It held that level, and in actual fact, if we wipe our face a teensy weeny bit, we can go for little boy Pippi Blue. We actually have a neckline there with kind of a shoulder, a W, and then we're resisting. Maybe we come back one more time. So that looks something like, on a bigger scale, this hasn't happened yet. We're asking the question. But that would be your neckline. That would be potentially reversal for the dollar index. What does that point to? Well, I've just mentioned some of the cases that are in the basket on the other currencies. That is Swiss franc, euro, pound, yen, etc. In other words, dollar strength against all those currencies. That spits out a whole bunch of trades, but we'll be fine-tuning. So in one of our predictions, in terms of this great macro crisis that is going to play out, one of our predictions is major continental euro issues. And we'll split that down when we get to talking about the euro Swiss franc, which I will follow into shortly after this dollar index, but that the euro specifically is going to have difficult times. There's plenty of reasons that already exist. Everybody wants to know the narrative. What will it be? Well, the second biggest payer did leave. It's all been focused on Brexit. Oh, they don't have their energy now. That serves them right. Oh, they don't have this now. That serves them right. Well, the biggest payer still left, the Eurozone. The deals and the murkiness of the deals, and why I said Britain will still carry the cost for having been in the euro. They've got a long tail event of liability that extends long after they've left. That gives us a clear time frame for that the reset will need to occur inside that window, and I think it's a better part of a decade from official Brexit, which they dragged out from 2016 until only recently, effectively from the end of last year, which was 2020. So it took 4 years, and then they're on the hook for 10 after that, which is pretty bad negotiating on behalf of Britain. But nonetheless, it'll be very, very damaging to the euro, whatever's coming. You'll likely get social unrest. You're going to get increased inflation in eurozones because the commodities that are priced in dollars, you will start to have dollar prices going up, and the beginning of an event where concerns about global inflation will not see those commodities actually come down. So if you have a 5% increase in the dollar, normally in a normal world where no one's pricing for great reset, the price of oil will come down 5%. That would make oil cheaper to Americans, but roughly the same price to Europeans. This time will be different. You can have an increase of 5% over a year, for example, in the dollar, or over 6 months or 3 months or even a single month, but the commodity will stay the same compared to where it was prior to the 5 price increase, and even go higher, so that Americans will still continue to get a teensy-weensy bit of inflation out of their oil price. Remember, we call it the Rockefeller tax for a reason. It's your first global tax, has been in existence for a long, long time. As oil and the OPEC deal was sewn up by Kissinger, you've been under a global tax in your energy. And it's not ironic, actually, that at the height of 2006 and 7, the oil price hit $150. So they were skimming you on that tax while you were making money on your flipping properties into the end of the collapse. But you wore the elevator back down on those assets, and you had to pay and make whole during that period. But that tax you paid on the oil barrel that you were filling all your new cars on when you were refinancing and buying the cabriolet, that tax on petrol you paid, you never get back. And that's why oil is your first global tax, without a doubt. And the oil petrodollar standard is how they inflicted on you. But that little piece of history aside, with dollar strength, you will not get associated to the same degree commodity weakness. So that is going to be particularly devastating to nations rest of the world, ROW, rest of the world, particularly FX emergings. So we'll show you 2 setups on FX emergings next. So overall, we are saying, and remember, it won't be a ripper straight away. I've done a small sketch. You will go up, 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 up into a third high, have a down, and then roundabout at some point. Bear in mind, this can happen quite quickly, faster than I'm implying in this. This is a diagram. It's not a time frame diagram. It's more about what the ebb and flow will be. You will go on your way up to roundabout a level like 97. Again, you'll drift off, and at some point we will have the impulsive move that will take you from the upper 90s, say a value of 97. We're not even near there yet, but things can change quickly. From this point, between the orange square and the next orange square, run 111.75 with possibilities to even take out on an overrun if it gets really disorderly, 120. And the interesting thing with this prediction that we're making, don't forget the last one. If you don't think the dollar index can move fast in a hurry, remember when it was 80.5 and the next time you looked, it was almost at 100 and actually traded through 100 there. bear that in mind as your previous bottoming signal. Also 2008, plenty of spiky moves up top there as well. So bear in mind, these things can move fast when they choose to get disorderly. And actually, you've been in a basing out period over here for which the dollar strength has not been particularly significant nor weakness. It's been a little bit up, a little bit down, a little bit everything. You need to think about this performance of dollar because it will be a little bit of a headwind for Bitcoin and for the gold and silver. But the key flippening event, which is why this makes a macro FX trade, is the event when it turns and when everyone is fleeing the rest of the world currencies, particularly the FX emerging. Please understand and take note. El Salvador's got into Bitcoin. Panama is investigating it. Other nation states are all investigating it. Next time, instead of everyone running into the dollar as their own, the Argentinian peso, the etc., the Venezuelan, some of that money will go to precious metals and blockchain-orientated tokens like Bitcoin particularly, and they will chase the liquidity, not the alts. And this could drive Bitcoin dominance for a major rally, by the way, for my crypto fans, as institutions and governments will take the low-risk entry, which is the store of value, long-standing, high liquidity. Big players of low-risk governments will buy the big brand. Nobody got hired for hiring McKinsey. That is the corporate thinking. And as a result, they will go the big brand. They are not buying a portfolio of micro caps in crypto. So that small hiving off of money that will run into the dollar, that will be a little bit bigger. The highway now has an off-ramp. And most people will stay on the highway, but some will take the off-ramp. And that smaller percentage that it may be will have a disproportionate inflation on a much smaller market cap area. You say small market cap, 2 trillion for crypto, compared to the debt bond market where everybody will rush into to try keep heat in the bonds. More and more people are getting debt suspicious. And as a result, not all of it will go debt. Some of it will go stinky stoink market and to be in dollar-based assets. Some of it will go into American real estate. And we will see crypto and these others. So a special point on Bitcoin dominance and precious metals, and a key flippening moment when you get ascendancy of the anti-fiats at the same time as the god of fiats, the dollar, is going up relative to everything else. This is the capitulation of the lower outlying areas into a super spike of the urban Manhattan that is the single biggest building in the village, the dollar citadel. So a couple of points for you all to understand out of that. So we've called for 111.75 and potentially even a spike that could take you through 115, even possibly up to a much harder ceiling. Why do we say a harder ceiling? The last time the dollar index was at 120, which and it was a resistance for a very short period, was the .com and it all being about America and American tech. Schmoogle, do only evil, sell out your citizens of the world. Apple, all these companies were in their resurgence, early doors. We had the likes of Cisco, etc., all over here. That was the .com. It's all about America, running into 99, 95, following the Greenspan's irrational exuberance around about 96 there, and we had the whole .com run into the 2000s. So that's big history. That's many decades. It feels like yesterday, but it's many decades now. It's two decades ago. It's 20 years, certainly, if not many decades, it's many years. So that foundation, the dollar index, I really wanted everyone to understand. This prediction from end of 2019, early first quarter of 2020 still holds. We dipped a little deeper. That's what 25% new money in your system actually does. That's what 6 or 7 trillion actually does. You go down a little harder, but you have begun the spacing out process. You'll go a little bit up, you'll go a little bit down. Long term, dollar up. Milkshake is on. Okay, so let's talk about some of the specific trades. You can, of course, trade the index, the dollar index, if you chose to. Most places will have it as an option for you to consider and to trade. Let's have a little look at the transition to the Euro Swiss franc. So I have previous history with this. I have previous history with this, indeed, and I'm looking forward to telling you about it. So our go-away trade, I went on holiday November, December of 2008 into 2009. This was before anything such as the Greek crisis and the problems in Europe was even a discussion point. And this is where we were on that great day in that chart. You'll see the 2009-10 pivot into what turned into the whole Greek crisis story that then went into the pigs. And I had already seen, for me, a flat bottom that showed central bank defense at the 150 level, 1.5 euro Swiss francs. A little bit of history for you. Long time ago, when 1 euro bought you 1.5 Swiss francs. And we had our first inverted HVF. You'd need to look at it at a much smaller time to understand it, in a new trend, which is overperformance central. And you would have closed this here chart all the way down here somewhere. Let me just log scale so that it marries up. Might have been reg scale. There you go. You would have closed at this point over here way, way down. Now, I just want to tell you, 150 down to 122 is a massive fall in currencies. By the way, Scandinavian Capital Markets, just below. You get 100x and you're still in a beautiful Western European country that actually has very nice rules for those that are concerned about needlecraft. But that point aside, very cultured society, but outside of the EU, so they can still offer the 100x on these kind of trades. That doesn't mean leverage is not dangerous, and you've got to have method and you've got to be careful. The link is below to open and fund an account to take out one of these trades. But a move like that could see you control quite a reasonable size. You could have a stop, a take profit, and you could stay in and in and in, and it was a winner of a trade that just kept giving right up into that point. Whoops, I moved the stick. It's not what I meant to do over there. That would have been your exit from a short up top there. Then the Swiss franc fail came Mark II, which again we asserted and called. I was on Tips TV at the time, and I said the peg will fail. Everybody was buying the 120. It was free money when it ran up. It was free money because they had the Swiss National Bank at their back. Oh, dearie me. When you have one of the most deceptive and flakiest of friends, is it not a mistake to think you have a real friend at your back and you won't get stabbed? Well, IG, Saxo, all the major brokers, it was the death of Alpari. FXCM lost an inordinate amount. They had to be recapitalized. They all went into near failure on the single pair event. That's right, the Swiss National Bank walking away from their commitment to hold not a peg, it's actually a floor. They kept calling it a peg. It wasn't a peg, a loose peg. It was all about support. It was a floor, not a ceiling. You'll note that they allowed the market to float off the 120. Giving all the free money. There's no such thing as free money with no risk. You are waiting on a banker's word, and I would never trust him. By the way, that was also the same bank that had Hildebrand, whose wife was trading Forex currencies, funnily enough. Isn't that interesting? Had to step down. His wife was a legendary FX trader. I wonder who was putting those trades on his wife's named account. I wonder if she thanked him for dragging her name into the game. Anyway, subsequently, we called a similar geometry fail, and that saw a parity run. That was the target at 94. You saw the one level fail. We are calling here today on this channel the euro to fall through parity, and not just parity, in its most extreme moment to put a foot below the 70 level. That's right, a 6 nines and possibly more. We are calling. You don't get nothing news down here. You get ballsy call trades, my friends, by the way, on the euro Swiss franc, because many of the Europeans have already shown you how they behave. They prefer the controlled dark state nation with all the underground secret services and the square flag of Switzerland, which actually still maintains a semi-serious approach to sound money, to the European euro. That's right. Landlocked it is. It speaks German, it speaks French, it speaks Italian too, and those are the big nations. Where is your German that sees a European collapse going to move his money? Some into dollar, yes, maybe, and a whole bunch into the Swiss franc, a whole bunch into gold, silver, and nowadays, crypto too. So it'll be a thriller, it'll be a spiller. It's going to come to you all the way from Manila, and it's going to smash this baby right down through the 70. On balance of probabilities, that's our call. They never dealt with the issues. They have only created an environment of semi-stability. Notice with me how, since the collapse, this has been trading in a square like that, between the parity level, the box in blue, 1 up to the last time of the floor level at 1.2. Note how you have a return move. It's almost preordained in a reflation relief. It's all over. We've corrected. Isn't that lovely? Back to love and cuddles and puppy dog tails. Only not. Now we are settling to the flat side. The long-term issues, the time has run. No real difficult decisions have been made. The rioters are already happening. It's getting most uneasy in places like France. It's getting most uneasy in a number of European states. The Italians are a bit grumpy about how the Eurozone has worked for them and the British leaving. This, my good friends, was the square, in my opinion, that this market was not allowed to run its full capitulation. And had it been, you should have had an ongoing, let's take that out, an ongoing sell-off into the Swiss franc, into somewhere here, and then you would have rallied. Right now, they are probably passively, and I will point this out, defending the 1.5. They are probably passively, just a little bit trickling it away, trying to make it a little less obvious. Don't forget, they were at one point defending the 1.5. Now my suspicion is they come in here, 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 and here. A little bit of, oops, it's coming down a bit fast. We'll backstop that. We'll backstop that. A little bit of liquidity provision. Oops, liquidity provision. And down we come. You're on a shooting star right now, by the way. And this, in our view, is a macro inverted continuation pattern. The correct chart would have been this red line over here. That's why you got the spiller, the absolute thriller over here. When they walked, they put a box behind this price at the 120. When they walked, that's what you got. How far this would have gone if it hadn't been allowed to do it, it might have got a bit disorderly. Maybe it only would have traded the same level because there was plenty of panic there. But boy, did they have to come back in and shore it up. So I don't think there ever was true, full, long-term price discovery and the adjustments taken in full. And guess what? The Swiss people don't like stacking euros. They don't like it when their central banker sells a hard currency for a broken one. After a while, they have to answer as to why they have done that. So watch out. This will be our second and third impulses, and we are expecting not too distant future. Bear in mind, this is valid for 18 months. It could be next week. It could be next day. I don't think you need 18 months though. But it's valid for that entire period that you're in the stall box. We are getting flatter and hanging lower in this box. It's more about 105 level being defended than selling off the 120 level. You've only come up once here and never returned again. So the euro Swiss franc to fall through the 70 level, the 70.8, means you could trade a 69. You don't have too much further. You've just got your second big call that doesn't involve the dollar. It involves the Swiss franc as strong and the euro as selling off. One of the big losers in the dollar index running up to 11175, potentially getting up to even on a 15 and a 20 and a blow-off moment, if such occurs, will be Eurozone, European Euro currency loss. If you are sitting in Britain as well as the rest of Euroland, you currently have major currency risk building up for you. What's going to happen? Apart from riots in the street and the bread and the coffee for the French costing too much, there's also going to be unhappy Italians, unhappy Poles, unhappy Germans. You're going to have property prices do that, as the currency does that, on the basis that one is a hard asset that actually delivers some support and the other is in fact. So you're going to have much the same as what happened in America as America printed and the dollar index fell all the way from March 2020 on that event that I will not name, all the way down, right the way through to the low and then stopped. So, is the Fed legit? Never. But could they do a little more than most people are backstopping them to do in terms of taper and rates? They're going to do enough to drive it at least to 111.75 on my on balance of probability scenario from the lows of 93, which is a huge dollar period. You'll be reading all about it. You will hear cries. This is almost a reset prediction. You will hear cries to end dollar hegemony, as incorrectly inflation in Europe and the Far East and emerging nations will be blamed on the strength of the dollar, and as a result the cost of oil, the cost of corn, the cost of everything commodity that is listed in dollars. It will have nothing to do with the strength of dollar. It will have everything to do with the weakness of the rest of the world currencies. It will have everything to do, and they will use that as their incumbent on-ramp to bring on board their central bank digital tokens, for which they will control how and when and what you're allowed to buy. And your great slavery will come out of this, so you better make some money as a result of it. So, Euro Swiss franc, a short. By the way, in terms of percentages, in case you're wondering, that's a 36% currency, two major currencies call. Big ballas. Ne. Okay, so let's give you your next trade. Mining the theme of dollar strength, we've got to look at some FX emergings. I will take you out of the monthly and bring you to the weekly, which is still a big time frame, and point you to the blessed Russians. How can Europe be punished and Russia go unpunished? Well, I think she will be punished as well in some currencies, although they'll probably do smart things and buy more gold. But overall, there's a real structure technically that could happen. Which could see a super spike. So we can see, as Eurozone has troubles of inflationary nature, to do distraction techniques, we can do the Russia bad game. The Russia is bad game. It's also them making profit in the oil price. Look at this. The Russians can produce for a much lower price. They're doing this. More sanctions. Somebody killed somebody that was Russian. Or a Russian killed somebody in some other country. Some other fake notion. So you know who you've got in the White House. You know who they'll create a boogeyman for distracting you against the fact that Europeans and Far Eastern and emerging market economies will all be facing much higher inflation, be really pissed off. Well, turn on your usual whipping boy, and this will be it. And you'll get some degree of announcements, some ships sailing close to the Black Sea, going into the Black Sea, going past the Crimea areas, and showboating and puffing their chests on the basis that Russia are profiteering out of energies, gas and oil. Check out our opinions on gas and oil that we also mentioned in the Palisades radio interview. Natural gas going up, oil going up, a macro call on oil. These commodities are going up. They're going to try and mask how much they're going up by pushing the dollar up as well. So it's not oil 10% up, it's oil 4% up and dollar 6% up. It's kind of distributing where the damage is occurring to mask and hide the fact that you are in a global inflationary environment. America's had its share. It won't get away from it, but some of the ugliness of it is going to be passed to the rest of the world. That is proliferation. USD Rubble, your third trade as a potential on the weekly chart. Go and find it, go and mask it and manage it yourself, or click the link below and be part of our community. You'll be watching these like thieves in the night and capturing the low risk, the key moment of low risk, highly expansive trade. Probably occur on a Fed or a non-farm day. So the Mexican peso, one that actually did perform when we had the events that were March 2020 and actually made its target very, very nicely on a super spike, has subsequently come all the way back down. Beautiful trade that. It was like over in seconds. Bang! Done. Thank you. Amazing, amazing trade. And guess what? As the dollar died and did the 6 trillion print, it came all the way down and then suddenly, there's kind of a level. And guess what? Law of round numbers. Hey, maybe it's 20. Funny that, isn't it? You wind up at a key round level where you just iceberg through it. And then you smash it and come back. And what was previously resistance now turns support. You think these rules don't hold? You think technical analysis is amazing? Oh, but they manipulated markets. It doesn't work. If I hear another little pippy pissing in his pants saying that, I'm going to have to just lean out of the YouTube screen and give a wet, running F-slap to the side of the face like this. Every participant in the market is the footprints you see on the sand. We called the 1.5 euro Swiss franc with the Swiss National Bank already intervening. Every player leaves footprints in the sand. You just get big ones and smaller ones. The manipulators are the people that have big money. Guess what? Eventually everything becomes painful if you're holding up the tide. And they will fall. And they set up structures like this. So, there you have it. It's manipulated. Technical analysis is worthless. Oh dear. Yes, indeed. It's kind of like saying, oh, never mind. I'll leave that one. I'm going to get into a dark topic. So USD Mexican, another one for you. Base. By the way, you can have a moment of weakness on the dollar where they will also do, and this is typical of markets, and everyone will come out and go, you see, you were wrong, where you have what's called a final capitulation bump. It's almost like, this is kind of descending. It's not very pretty, actually. And I would expect this is almost as possible, or more probable, to have a final little stab down where you trade 9.5 and a snap back out. And then it's all systems go and you get structure on that. So you're going to have to watch the Mexican peso for upside, but you had a real blow off and you came most of it back and you've held support at 20. That seems like the kind of thing a big player would do that you can still see on technical analysis for those manipulation fundies that put their hands in their pants and manipulate themselves in pleasurable ways, but say technical analysis is worthless because of manipulators. Everybody who participates in the market is a market participant. Only their size varies. Some of them are little pippies and some of them are big pippies. Now stop playing with yourself. Okay, so that's the two emergings, but Korean won, you wouldn't say is an emerging, it's a developed market. It's the market of Samsung following you, tracking you, tracing you, doing everything with you in coordinates with the international banking cartel and Apple and all the other do no evil Satanists. But this is still one of my favorite structural setups. We got faked out and pulled back in. And that, I think, was a delay. They might not have been ready. They had to push everything out. The big dollar pump against the Korean won started to happen there and was put immediately in the can with the events of 2020 first quarter. And you got sold off brutally by the dollar and you have begun a drift up, but slow. Remember, this isn't going to switch now that I've done the YouTube and everything's going to start kicking off for you. You're going to forget about this. Let me tell you, less than a fraction of 1% of you is actually going to put one of these trades on. Let me tell you, this is my challenge to you. Less than a fraction of 1% of you. I'm casting pearls before swine. Not because I'm looking down on you. I'm not wasting my sweetness on the desert air. I am tempting and defying you. Less than a fraction of 1% of you will keep an eye, watch, wait, manage, and take these trades. One of them. Never mind, I'm giving you 6 and an index trade. Less than a fraction of a percent. And you'll come back afterwards and you'll say, yeah, he was right on that one. If only I'd put it. If only I'd put that on. Career-making trade, and another one passed you by. It reminds me of Richard Branson when guy said, Richard, you made so much money, but you know you had the opportunities. I mean, what would you say to me right now? That's $1 million project. And he was literally being interviewed as getting onto one of his planes. And he said, I saw those heaters that they have in New York when it's cold, that has the gas canister and projects heat so people can still sit outside and has a little bit of a sill and everything. You should bring those over to Europe. They're not there. This was like 2 decades ago. And the guy goes, yeah. Do you think he did it? No, shit, he didn't do anything. Someone else did, and someone else made the money. Somebody else got the distributor. So that's how it is. That's human nature. I'm here for the fraction of 1%. In fact, you want to make sure you don't miss it. You hit the link below and you come and be in a community where we're all watching for it. And there's alerts set and we're playing it. And it's our goal to not just get one of them, to get a few of them and to turn them into wife-changing money. That's only a joke, by the way. And if you're transgender and female, you're welcome to change your eunuch or your man or anything else that you fornicate with. Good. Okay, on that cheerful note, the USD Korean won, a doubler, 50%. We're giving you a 50%, a halvening of the one trade. You can have it now at 1172. Oh, but it'll go up, it'll go down. Where's your stop? How are you going to manage it? It hasn't yet gone. It will get disorderly in one sharp, violent moment. And it could have something to do with China. It could have something to do with the Southeast Asian ships searching out and America trying to assert itself on islands that it probably has no business being, and China trying to assert itself, and a little bit of warmongery, a little bit of all the usual control structural elements, and you will get the semi-Western capitalistic nation like Korea. This trade's never gone away. It just got postponed. It got postponed. Flat-bottomed, good structure, prone to spikes. There was your 97 Southeast Asian collapse. Here was your subprime spike. And you're just waiting for the next one to do another super spike. That's right. And I am saying to you, that moment is coming. That moment is coming. So we've covered quite a few trades for you. You have seen from us that we expect the Dixie to go through 111.75. You have seen from us that we expect the Euro Swiss franc to actually lose the better part of 36 to 37% and actually trade through parity, through possibly even the 0.7. On a downside, that's going to bring hardship to Europe, inflation to Europe, the French on the street, and complaints about the dominance of the dollar and the cost of energy and oil in dollars and all sorts of, oh, isn't it time to think the unthinkable? Let's have a new idea. Hey, how about central bank digital tokens? It just occurred to me. Oh, here's a little last minute rule that I'll slip in. You can't buy if I say no. Okay? You see, none of that was planned, by the way. None of it was planned. It just incidental. It just popped up as I was releasing it. I thought, wait, let's just tweak it a little bit. You know, that's what your controllers are all about. So your final FX trade that I will talk to you is with the dollar strength. There will also be weakness on the yen against the dollar. And this structure is suggesting to me that you will see 135.939 in it. 135. Currently, you're at 110. This is another major significant move. Calling 135 is like another 22% up. Plus, it's a really big structure and it's the largest of its kind, which could see real overperformance. So the whole of the East is going to go down on structure. You're going to expect possibly Japan to talk about quantitative easing, the miracle cure that's fixed all your economies. Have you not noticed how much better your life is? How much closer to a totalitarian dystopian slavery that this process has brought you. Therefore, it must be good and we should do more. We should usher it in so that the Bolshevik communists can totally own your life and existence, destroy your currencies and fiats, turn you into a debt hole, and then do a debt freedom contract with you where you exchange for your safety certain freedoms. That's right. And your debts are relieved. Digits in computers are relieved against you. So this particular structure, very, very sexy, could be at an RH3. You don't need to go much further. If this turns into hammering, you could break from here. This could be happening in weeks or days. But there will be a disorderly point where it will really pump and it will all be the news. And it'll probably pump and blow up on a whole bunch of areas. The fact that this is going to see the East, I'm looking at the Yuan, the yen, but also the euro, tells me that it's probably macroeconomic and dollar strength, but there could be all sorts of things such as the usual suspects: war, sanctions, elevated anger towards China, Russia, the usual suspects. And we will get the news, the fullness of the news, and the fullness of the lockdown of society. It could even be the word that may not be mentioned from March of 2020 reoccurring in a new mega version, a superfly version that flies very far through eye sockets and contaminates everyone and leads to great deaths. We don't know. We will see the fantasy that they will bring to us as narrative. Finally, a look just for interest, and this is not officially a trade that I've given you because I've given you 6. I promise you 6. I give you 6 of the best, and not all of them are just all the variations on dollar. This is a peg currency. What you have seen here since this peg, this is on a monthly time frame. This is, of course, the Chinese Yuan. Is initially you saw, look at this, look how awesome China is. Then you ran into the 2016 problems that went like that, that, and that. You had the rising wedge there. And you had the spiller, the absolute thriller, which was the dollar weakness all the way back into there. That was extreme and harsh, and it ran for the better part of a year and a half into today's current lows. So also expecting that there will be some degree of relative weakness here and that this will go back in that direction. I'm not sure if it's the super trade. I'm going to tell you what is, though. I'm going to tell you what is that involves China. The super trade on China is your one index. The index, yes. Trade this long. Trade this long, baby, and you may have currency weakness of the yuan at your back. And isn't it a great time to come out with a long call on Chinese equities right into the teeth of the Evergrande debacles when everyone is being taught fear? Let me tell you that right now, all the control structure is busy wading in the same way they FOMO into Bitcoin in the dips with FUD news. So they will be buying here. The insiders know. It's written on the back of their Freemasonry cards. That thing that is based on Kabbalah, you know. Their little society and clubs, if you're higher enough in there, you've committed enough crimes of severe intent, and you have been enlightened and illuminated as to the way of the world. And for you, Dick Cheney is a hero and a masterful man. This structure is the Shanghai Composite. That is a monthly chart. Super spike of 0708. So during that period, China was building and making everything. The West was on its knees post property boom and failure. You then had a lengthy glide down, which set up another pump for the index that went into 2015. 16 was a very bad period for China. Debtedness came into focus. Weak recovery rally and then into a new low, but all part of a falling wedge that has now formed a rising wedge that you are now sitting in now. This for me is very close to maybe one more dip slightly and then a super spike high that will run 7860, currently 3642. We're talking about more than 2 times, and it will happen hurriedly, as it has shown it can do Big numbers in short times. That was coming into 2017, 1400, hit 6,000 by the top of 08. So coming in 06, at its top at 08, 1400 to 6,000. Tell me you can't get overperformance in this baby. That is what it's shown you it can do before. Look, that was one of the best. Reset will set new standards for mega spikes. The billionaire class will become the trillionaire class. The blue collars will be choked on the inflation and cost of everything. That's their game. That's how you kill them. That's how you kill them. And you will throttle the middle class with your ever-creeping tax, marginal tax bans, the lack of assets that they don't own, that they'll be forced to sell to keep food on their table, to maintain the cost of schooling for their kids and everything else. This is an enrichment game where the polarity is the goal. The polarity is to move all the chips of the table into one group of people's hands and to flatten the rest into their Bolshevik communism that is coming. These asset owners will do exceptionally well. You could be them. Okay, that is your indice. That is your 6 FX trades. I am the market sniper. I am Francis. I haven't looked at any of your comments. Let me do that before I sign off. A lot of USD long setups, yes, but also the Euro Swiss franc. So if you don't trust in the dollar being long, you don't trust in that dollar index chart that I showed you over here, you think I've got it wrong, it's going down. Everything. Listen to all the people that say it's down. In fact, very few people talk about dollar up, Brent Johnson exception. The Peter Schiff, dollar's going to crash. Mike Maloney, dollar's going to crash. Dollar crashes against what? It's a currency. Currencies are pairs. Who's the other half? Okay, it might be a crash against Bitcoin. It's already crashed against Bitcoin. Bitcoin was $1 at one point. It's now 64,000. There's your dollar crash against gold over 100 years. Yeah, it's probably had a crash against gold as well. It's lost 97% of its buying power. Fiat to fiat. I don't compare MPV wagon with a Formula One race car. You compare it relative to all the other fat, boring, dull MPV wagons. And in actual fact, it's the least bad. It's the final one to drop. It will die because of excessive success on a pump in a totally contrarian way. And it will be substituted with central bank digital tokens. By the way, I'm not saying it stays up forever and that all other things will then fall. I'm saying to you the next major moves is it kills the global world economy through strength, not weakness. And that the rest of the currencies die relative to it. That could mean there actually is a little bit of taper. They actually do for once. As I started with the Fed, I can certainly mention them again near the end here, that in actual fact they maybe do something and trigger a melt up. And bear in mind, it won't just go straight to melt up. It's going to work its way up, work its way up. It's going to squeeze. You're going to feel the tightness in the market for dollars. The demand will be necessary. He doesn't want to. Now they're ashamed of how much they proliferated. Now they don't want the inflation back in America. He doesn't want to cut any new dollars into the pot. The world is actually printing everywhere, the rest of the world. And suddenly they need dollars. They have to bid up supply. America is not increasing their amount of dollars at the same rate that Europe is creating new euros, which also isn't used for pricing items like oil and all of them. And dollar has its final moment of power as still the pricing mechanism for the commodity market until that is removed. After that is removed, dollar weakness for sure. But by that point, my friends, we are on central bank digital currencies. There are many more options, and that will be a long tailing goodbye potentially. The key thing is what happens next. Death by success. AMC short squeeze. Have I missed the asset trades? Love you, Father. Oh, I have spread my seed far and wide. Much was my lusty pursuits of younger years. Cash against gold. I was going to mine it when it was $1.30, but I was too lazy and wouldn't have been worth the electricity. Well, are you going to be lazy again? or are you going to take action? Swedish krona. I don't want to get into too many exotics. It's outside of the scope of this particular one, but we can have a look. The Swiss franc, we can do the dollar Swiss franc. I'll do that because I've positioned the franc as a strong half against the euro. In the euro crisis, we will learn again that not all Europeans want their currency in American. Not all Europeans want their currency in American. This is how the dollar has done against the Swiss franc. And it sold off recently and it's there. It's not over impressive for me. Given the choice, I'd have Swissies. But I think in parts, the dollar will outperform the Swiss franc on account of the Swiss having to not get too overly expensive relative to Europe and coming under European. You're talking about a small country that is locked to the Eurozone. So, but it's not over impressive for now. What else? What else are the questions? Swiss francs are delish, says somebody. Yes, Frankfurters, I hope you're talking about. Some big pipi chomping. Nice to meet you. Keep in touch. Okay, thank you. Nice to meet you too. I've missed the assets to trade. Give us a thumbs up. GBP CAD, says Iseto. You're going to have to look at that one yourself. I'm not going to do all the crosses. If I start, I'll never finish. Gold. So the key part, I will cover gold because what I'm suggesting, and the key part of this, and I'm going to finish on this actually, the key part of this is there is a flippening. In other words, what I'm suggesting is these other items such as oil, gold, I've already called a bottom on platinum. You can see how that's done today. It's doing better. It's actually above the 3 digits. Your chance to get it at 3 digits is over. It's now above. You might be able to get a wick down, but don't leave it too long. That has reversed. A beautiful hammer in there. I bought it 3 digits, and I think that's going to be a good buy. So what will happen is these, particularly I think platinum will be one of the early runners because it's at such an extremity right now, but the baton will be passed and silver will run last and hardest, or in the middle somewhere. Gold will reassert. Gold-silver ratio will come back under 70 and we'll start to go down. You've got a bit of an engulfing there now on the big time frames. So you've squeezed higher. I think a bit of a down. I think you'll trade under 70 and then you'll have silver and gold all moving up. And oil. Look at oil in a strengthening dollar. We've had a period of the dollar firming up. That's your oil. So for those that say it can't happen, look at that last candle. Let me just pull that into the limelight a little bit more so you can see it. What I call a look one way, go the other way candle, which is a real rejection candle. Only it's in green. So it opened, traded down, got its butt kicked, came back up, and is now trading beyond its open. All colored in green. That's that candle. Test and run the other way. You are here. Current. Open. Low. Reject and beat. Attack, I counter attack, and I smash and come and get your mama behind enemy lines. That's what's happening right there. This all on dollar that started to found its base and stop going down. This, you'll come for new highs. That was your return move to the falling wedge that we've drawn so kindly for you and told you all about. Oil long remains a trade. It's not a trade I'm giving you today. It's a trade I gave you a long time ago. Very soon after the great short to reflate. Platinum, also given to you on this channel previously. Okay, good. Any final questions before I sign off? Don't forget the links below to get your mini series. Don't forget to book a call if you want to be ensuring that you maximize the best of these as they drop. They won't all necessarily drop at once. Some of you will. Some of them will. So what happens to the indices in America? So lots of money wants to rush into America to get out of euros, to get out of rands, lira. Have a look at those two as well. But the best ones I think are ruble and Mexican for now. But remember, you can have a final dip sell before you go. It's not to the day or the hour this. This is your next 18-month event calendar that I've given you. You've got to time it, you've got to get it right, or you've got to join up with people that know how to do that. So what happens to the SPY, for example? When money that is afraid of losing value has to chase risk where it thinks it won't lose value, some of it will go into their debt market, which I think is plain stupid, but that's how they've been trained. But more of it is going to go seeking risk to get yield. That means the US equity market could go up on a strong dollar in the same way gold and Bitcoin and platinum will. In other words, all the other rest of the world fiat currencies being deemed to be in some degree of failure will see money running in all the other directions. The last one standing in the room, the dollar in what asset? In the shares, in the debt, on the basis that it will survive. And then those that reckon, but even the dollar fails, it just has a melt up before it fails, will go into Bitcoin and equities and gold and silver. So that is your key event. Oil going up, gold going up, platinum going up on a really strong pump of the dollar, Bitcoin going up, real pump of the dollar. And remember what my comments on Bitcoin dominance, store of value. It will be the token of store of value with brand that the big guys chase, institutions and central banks. Bitcoin dominance could have a run. Then you will roll into an alt run. That's not to say the alts won't do well. You just might get more dominance initially for Bitcoin. Then you will pivot into a more general use. Initially, fear is store of value. Okay, on that great note, thank you very much. Have a beautiful weekend. You have been given 6 of the best FX trades plus an index in terms of China. That one's going to run. That one will run. It'll be a big nation. But I think the NASDAQ will also do so. But I think you will get disproportionate upside out of the Chinese version thereof. We will catch you later. Thank you for watching. I give you one salute. I give you the other hand salute. We'll see you on the other side. Let's see if you take action on any of these and you catch a right time. Keep me in touch on Twitter at The Market Sniper. That's right, that's our Twitter handle. Remember to sub the Odyssey channel as well. You will get this and resites and so much more. We love shares, but there's no adverts. We thank you for the likes. Bye-bye.